Hello everyone, welcome to EduTap and welcome to the Fatafat revision sessions. Today we are going to do the top 100 most important MCQs for the finance current affairs for the RBI notifications, and let me tell you that I have brought all the important notifications of the June itself. So we are going to have the complete revision, we are going to have the complete revision for the finance current affairs and the RBI notifications, even the RBI notifications, the RBI press releases that have been released in this month only. So we are going to cover that also holistically. So now before starting with this 100 most important MCQs, the EduTap has brought for you the complete guide to become the RBI manager. So through a single guidebook, you are getting the complete syllabus of the RBI Grade B, as well as you are going to get the PYQs, the previous year questions in this single guidebook that you can practice, that you can have for your understanding. As well as we are also going to provide you the sources for the, we have provided you in this the sources for the RBI Grade B, okay, for your preparation. So do download this guidebook. This is absolutely free of cost. You can download this guidebook. The link is provided in the description box below. So do download this guidebook. So now we are going to start with our first question, that is recently the Turbo UPI, which aims to deliver a 5-time faster payment experience, streamlines the payment process and eliminates any redirection to external apps. So what is going to happen, that the UPI, through the Turbo UPI, if you are paying in the Amazon, if you are buying the products from the Amazon or from the Flipkart, you will not have to go to the third party. That is, you will not be transferred to the Google Pay or Phone Pay. Okay, you can directly pay in the Amazon itself. Okay, you will not be outsourced. You will not have to go outside. So here I am getting the answer D from everyone. Good evening everyone. Good evening Mehak. Good evening Samarth. Good evening Harshal. Hello Rekha. So good evening and hello to everyone. And here I am getting the answer. That is D, and that is absolutely correct. So Razorpay is the one. Razorpay, the Turbo UPI developed by Razorpay in partnership with the National Payments Corporation of India and the Axis Bank. So Turbo UPI is India's fastest one-step UPI payment solution through which you are going to do the payments. This is the Turbo UPI. You can pay in a fast manner. Okay. Now coming to the second question, that is Dash has launched a new logo of the company, and the integrated campaign has been launched that has the tagline "Life ko banao rich." So which of the following banks has launched the new logo with the integrated campaign? So try to give the right answer of this one. So I am getting the answer. So yes, the answer is Yes Bank. Okay. So the Yes Bank has launched the new logo, has brought the new logo that represents the soaring bird, and Yes Bank has planned to launch an integrated campaign with the tagline "Life ko banao rich." Okay. Now next question is Reserve Bank Innovation Hub. The RBIH has joined hands with Dash to introduce voice banking solutions to eliminate the language barriers across the country. So which of the following has joined hands with RBIH? So here I am getting the answer. So it is IIT Madras. Okay. So it is IIT Madras that has joined hands with the Reserve Bank Innovation Hub, and for launching the voice banking technology that will be available in Hindi, English, Tamil and Telugu languages. Okay. Now coming to the next question, the Monetary Policy Committee meeting. That concluded in June 2023. So this is very important from the exam point of view. Direct questions can come from this. So you have to answer this. That the MPC at its meeting decided to keep the policy repo rate under the LAF unchanged at what percentage? So here I am getting the answer A, that is absolutely correct. So the liquidity adjustment facility that has the standing deposit facility at the bottom, at the middle there is the repo rate, and at the top there is the MSF, that is the Martian Standing Facility. So the Martian Standing Facility is greater than the repo rate by 0.25%, and SDF is lower than repo rate by 0.25%. So the SDF, if the repo rate is 6.50%, what is the SDF? What is the standing deposit facility? So it will be 6.25%, and the MSF will be 6.75%. Okay. So this you have to remember, the percentages are very important. Now coming to the next question, that is the MPC has provided the projection for the CPI inflation, for the retail inflation for the 2023-24. So what is that percentage that has been estimated, that has been projected by the Reserve Bank of India, by the Monetary Policy Committee? So here I am getting the answer. So the answer for this one will be the 5.1%. Yes, absolutely correct. RJ Swati, yes. So it will be 5.1%. So the Monetary Policy Committee has provided the projection for the CPI inflation. That will be, as per the Monetary Policy Committee, the CPI inflation will be 5.1% for 2023-24, and the real GDP projection has been given at 6.5%, 6.5% for the 2023-24. Okay. So here the right answer was 5.1%. So this is the estimation that has been given by the Monetary Policy Committee in its recent Monetary Policy Committee meeting, and this is the projection for 2023-24. Okay, and the recent estimation that has been given for the real GDP growth for the 2023-24 by the Monetary Policy Committee is 6.5%. Now coming to the next question, that is, an international conference has happened on dash under the India's G20 presidency. This was jointly conducted by the Reserve Bank of India and the CERT India, that is under the Government of India. Okay, so you have to answer this correctly, that what is the title of the international conference that has been conducted by the Reserve Bank of India and the CERT India. So here, yes, I am getting the answer D. Muskan has given the right answer. Nilesh, yes. So it is cyber security exercise for banking sector. So here only the name is important, that you can directly remember and you can directly answer this question very easily, that the international conference has happened on the cyber security exercise for banking sector under India's G20 presidency, and this has been launched by the Reserve Bank of India in collaboration with the CERT India, that is the Indian Computer Emergency Response Team. Okay. Now coming to the next question, Shri Shaktikanta Das, Governor of the Reserve Bank of India, has launched a financial inclusion dashboard that is named what? So what is the name of the financial inclusion dashboard that has been launched by the Reserve Bank of India for its internal usage? And this financial inclusion dashboard is going to provide the insight to access and monitor the progress of the financial inclusion by capturing the relevant parameters for the financial inclusion. So here I am getting the answer C, and that is absolutely correct. The Antardrishti has been launched by the Reserve Bank of India, and this is the financial inclusion dashboard that is going to provide the insights to the Reserve Bank of India regarding the financial inclusion. Okay, so here the right answer is C. Now coming to the financial inclusion dashboard, I hope you all know about this. This is the Antardrishti that is going to, the dashboard is going to provide the insights through the data, like the data will be shown in the visual graphics form, and through this the better provision of the understanding will be provided to the Reserve Bank of India. And the Reserve Bank of India has been working towards the financial inclusion, and the Reserve Bank of India released the financial inclusion index in 2021. Okay. So now coming to the next question, that is regarding the committee. Okay, so the Reserve Bank of India had set up the committee for review of customer service standards in the Reserve Bank of India regulated entities under the chairmanship of who? So this committee was launched, this committee was set up under the chairmanship of who among these? So I am getting the answer D here, and that is absolutely correct. It was under the chairmanship of Shri B.P. Kanungo. Okay. So this committee was set up for review of the customer service. This was set up by the Reserve Bank of India, and the terms of reference for this committee were to evaluate and review the quality of the customer service that were given by the regulated entities, examine the evolving needs of the people of the country, of the customers of the country, as they are using more digital payments, as they are doing more digital transactions. Identify the best practices and suggest the measures for bringing about improvements in quality of the customer service, that how the customer service can be improved by seeking the global best practices and by seeking the domestic best practices. Grievance redressal mechanism in the REs should also be made better. Okay, and this is the background of the customer service standards and the framework that has been brought by the Reserve Bank of India. The RBI has made these committees, that is Talwar Committee, Goiporia Committee, Tarapore Committee, and then Damodaran Committee, and now the BP Kanungo Committee has also been formed in 2022 that has given its report. Okay, so this is the background that you can easily read. The PDF will be provided to you in the Telegram channel. Okay, now coming to the next question, that is urban cooperative banks got an extension of time to achieve the priority sector lending targets. You have to tell that the time that what is the extension of the time that they have got. Okay, so the urban cooperative banks till 2019 they were maintaining 40% of their adjusted net bank credit. They had to provide 40% of their adjusted net bank credit for the priority sectors. Now it has been said that the urban cooperative banks have to provide 75% of their adjusted net bank credit for the priority sectors. Okay, so here they have got the timeline till, yes, I'm getting the correct answer, that is C, that is March 31st 2026. Till this timeline they have to achieve this target of 75% of the adjusted net bank credit that should go to the priority sectors. Okay, so here this was the timeline that was given before, that by 2024 they have to achieve 75% of their adjusted net bank credit. They have to provide 75% of their adjusted net bank credit to the priority sectors, and these were the sub targets for the urban cooperative banks, that for the weaker sections they have to provide 12% of the adjusted net bank credit till 2024, till financial year 2024. Now the extension has been given in the timeline, and they have got the extension of 2 years, that is by the financial year 2026 they have to achieve this 75% of the adjusted net bank credit. This we have discussed in details, and you can see the session, you can see the previous sessions also. Okay, so now coming to the next question, that is the general permission of the branch expansion in the approved area of operation will be available to the urban cooperative banks in all the tiers except the salary earner banks, which comply with applicable financially sound and well managed criteria. So what has happened, that the general permission of the branch expansion is being provided, is being approved for the urban cooperative banks, okay, that are financially sound and well managed. So the urban cooperative banks that are financially sound and well managed, for them the general permission is being given for the expansion of the branches. Okay, so this is till a limit of what? So the financially sound and well managed, you have to tell that the net NPA should not be more than what percentage? Yes, everyone is giving the right answer, that is 3%. Yes, absolutely correct. So the limit is 3%. So the financially sound and well managed criteria, you have to have the basic understanding of this, that the urban cooperative banks, those are maintaining the good norms, they will be called the financially sound and well managed, and they will get the general permission from the RBI that without the approval of RBI they can open the new branches till a limit. Okay, so the financially sound and well managed UCBs are the UCBs that are maintaining the capital adequacy ratio of additional 1%. So for the tier 1 UCBs, what is the percentage of the CRAR, capital adequacy ratio, that they have to maintain? That is 9%. And for the tier 2 to tier 4 UCBs, they have to maintain 12% of the CRAR. So if they are maintaining plus 1%, that is, if the tier 1 are maintaining 10% and the tier 2 to tier 4 are maintaining 13%, then they can come under the financially sound and well managed. The net NPA should not be more than 3%. Their net profit should be there for at least 3 out of preceding 4 years, especially for the immediate preceding year. So these are the norms that they have to follow, then they will become financially sound and well managed urban cooperative banks. Okay, and when they have become when they are the financially sound and well managed urban cooperative banks, then they will get the general permission from the RBI to expand their branches till a limit. So that is 10% of the previous branches that they had in the previous financial year. So now you have to tell that, okay, 10% of 100 branches are 10 branches. So can they open these 10 branches? No, there is a maximum limit of how many branches that you have to tell. And it is so good to see that everyone is giving the right answer. Yes, so everyone is giving 5 branches, so that is correct. So 10%. So the urban cooperative banks are permitted to open the new branches up to 10% of the number of full-fledged branches in a financial year, subject to a maximum of 5 branches. This is without having the permission of the Reserve Bank of India. Now coming to the next, so this is what we have already discussed. You can read it. I have told you that the 10% of the branches that they had in the previous year, so they can open that much branches till a limit of 5 branches. So this is the main crux that you need to remember from the exam point of view. Now coming to the extension counter. If the extension counter, that is the counter of bank that can do the small minor work of the bank, so that extension counter can become a full-fledged branch, that can be converted into a full-fledged branch if the extension counter has been working for more than 3 years. Okay. Now coming to the next question, that is regarding the sovereign gold bond. We have discussed this sovereign gold bond in depth, and I hope you remember this scheme very clearly. So try to give the right answer of this one, that the government of India has announced the sovereign gold bond scheme 2023-24. The maximum limit of the subscription shall be 4 kg for the individuals, 4 kg for the Hindu undivided family, and dash kgs for the trust and the other institutions. So I'm getting the right answer, that is 20 kg. Yes, absolutely correct. So it is 20 kg is the limit for the trust and the other institutions. Okay, so these are the important guidelines that you need to remember. So the minimum size that you can buy for the sovereign gold bond is 1 gram of gold, and the maximum we have discussed. Okay, and the eligibility is that the Hindu undivided family, the individuals, the trust, as well as the universities, the charitable institutions, they can buy the sovereign gold bond. So here I hope you know the details, and we have already discussed this in our session. So I'm not going to go further here. The interest rate, just remember that the investors will be compensated a fixed rate of 2.50 per annum that will be payable semi-annually. So you can read it, and the PDF will be provided. You can see that also. So now coming to the next question, the Deputy Governor of the Reserve Bank of India inaugurated the sub-office of the Reserve Bank of India in where? So where it has been opened, that you have to tell. So where it has been opened? So it has been opened in, yes, Sorish, Tapan, yes, it has been opened in Nagaland. Okay. So now coming to the next question, that is, so very easy, that the new office has been opened in Nagaland, and the Arunachal Pradesh, still in the Arunachal Pradesh there is no office that is present. So that much you can remember. Okay, so in Itanagar there is the plan that soon the RBI will be opening the office in Itanagar also. Now coming to the next question, as per the recently released data by the Reserve Bank of India for the scheduled commercial banks, the data has been released for the 2022-23. You have to tell that which is of the following is not among the 5 states, the 5 states that have more than half of the deposits from the households during 2022-23. So more than half of the deposits from the households were done in 5 states. Which of the following is not among the 5 states? So I'm getting mixed answers here. Some are saying A, some are saying C, some are saying C, E. Okay, so Abhishek has given the right answer, that is Uttarakhand. So Uttarakhand is not among the 5 states. So here deposits with the scheduled commercial banks grew by 10.2% during the 2022-23. More than half of the households deposits during the 2022-23 came from 5 states, that is Maharashtra, Uttar Pradesh, Delhi, and city of Delhi, Karnataka and West Bengal. So Uttarakhand was not among the 5 states from which contributed or which had the maximum of the deposits in total. Okay, more than half of the deposits. So these were some of the points that are important. You just have to remember the yearly data points. Do not try to remember the quarterly data points. That will be too much. So here you can remember the yearly data points. The term deposits had the share from the total deposits. The term deposits had the share of 73.2% in the 2022-23, while it was in 44% in 2021-22. So now coming to the next question. As per the recently issued guidelines on the default loss guarantee, see, first of all, what is this default loss guarantee? So there is the digital lending that is happening. There are the lending service providers that say, so that there are many digital lending apps. They say that in 5 minutes, in 10 minutes, you are going to get the loan. So the banks and the NBFCs, they are partnering with such digital lending apps. They are partnering with such lending service providers that are going to acquire the customers, that are going to connect with the customers, that are acquiring the customers, to expand the base, customer base, to expand the customer base, to acquire more customers. The banks and the big non-banking financial companies, they are getting connected with such small fintech, that is the financial technology companies, that are the lending service providers. Okay, so the lending service providers are connecting with the customers and the bank is giving the loan to the customers. But what if the customer is not able to repay the loan? So it is the bank that is losing the money, and the lending service provider, if they have no responsibility, they can connect with any of the customer, they can take the wrong details from the customer and they can say that, okay, give the loan to this customer. So that kind of thing, that kind of irresponsible behavior can happen from the lending service provider, and that's why the Reserve Bank of India said that there should be some responsibility, some credibility of the lending service provider also, and they should be a part of this loss that is faced by the banks. So they have to take the first default loss guarantee, or they have to take the default loss guarantee. But they are the small fintechs, they are the small firms, so they cannot take much guarantee. So the guarantee is up to what percentage, that you have to tell. Yes, lending service provider, digital lending providers, we can call it any. So it is the lending service providers. So the guarantee is up to 5%. So as per the recently issued guidelines on the default loss guarantee, that is also called as first default loss guarantee, in digital lending platform by the RBI, the guidelines have been released. So the regulated entities shall ensure that the total amount of the DLG cover, of the guarantee cover on any outstanding portfolio which is specified upfront, shall not exceed 5% of the amount of the loan portfolio. So the lending service provider, they are able to give up to, or we can say not more than 5% of the loss guarantee. They cannot take more than that. Okay. So these are the guidelines, and just you have to remember that the cap on DLG is that the regulated entity shall ensure that the total amount of DLG covered, the total amount of guarantee cover on any outstanding portfolio which is specified upfront shall not be more than 5% of the amount. Okay. So recognition of NPA, non-performing asset, that is when the loan is not coming back, when that has become stress loan. Treatment of DLG for regulatory capital. So capital computation has to happen. Invocation of DLG. So the regulated entity shall invoke the DLG within a maximum overdue period. So if the person has done overdue, if the customer is not returning the loan, so after 90 days it will be called NPA, non-performing asset. So the regulated entity shall invoke the DLG cover, the guarantee cover, within a maximum overdue period of 120 days unless made good with the borrower, unless they have discussed the whole thing with the borrower. Okay. So the default loss guarantee, I hope you have understood that the LSP, that is the lending service provider, is partnering with the bank or the NBFCs, that are the regulated entities, and they have entered into a contract, into a outsourcing arrangement, that the LSP will be outsourcing the lending services. Okay, so the LSP has connected with has partnered and get under the arrangement with the regulated entity, and contractual arrangement has happened between the two entities. If the loan portfolio is becoming NPA, it is going under the non-performing asset, then the LSP has to take the cover. Okay. So I hope you have understood this clearly and you can read it. Just the basic things I have discussed with you, I have told you. Okay. So in this there was nothing else, just you have to remember that the 5% maximum up to like not exceed 5%, this much guarantee the lending service provider, the fintech firms, the small firms can take this guarantee. Okay. So a contractual arrangement called by whatever name between the regulated entity and the lending service provider has to compensate. So under which the later guarantees, the lending service provider guarantees to compensate the regulated entity loss. Okay, so this was the whole news article. Now coming to the next question, that is, as per enhancement in the trades platform, the dash will be permitted to participate as a fourth participant on trades. So try to give the right answer of this one. The previous notification, we are going to have a separate session. I am going to conduct a separate session on the DLG as well as the compromise settlement, as well as the call notice, term notice, and these three notifications that were released in this month. We will going to have the separate session, but today we are going to discuss it in brief so that any question that can come in the examination will be catered in today's session only. Okay, but for your greater understanding, we will going to have a separate session. We will have a separate session, so do not worry about that. So here I am getting the answer C, that is, as per the enhancement in the trades platform, the dash will be permitted to participate as a fourth participant on the trades. So it is the insurance companies. So the MSMEs, that are the buyers, that are the sellers. So MSME sellers, the buyers, that can be the corporate, that can be the public sector unit, that can be the government department, as well as the financiers. They are the part of the trades platform, that is trade receivables discounting system. Fourth participant is going to be the insurance company. So we have discussed this trades platform in the recent session, and you can read this also, that the insurance facility will be provided in the trades platform. The insurance facility will be provided in the trades platform, and that's why the insurance companies have become the fourth participant in the trades platform. Now coming to the next question, if there is any confusion regarding the trades platform, I have taken a session on that recently only, so you can see that session. Okay. So trades is trade receivables discounting system, through which the MSMEs, see, the MSMEs that are selling their material, MSMEs that are selling their materials to the buyers, and the buyers are not paying now. The buyers are not paying currently. So the MSMEs can go to the trades platform and show the invoice, the bill, and can get the money at the discounted rate from the banks, from the financiers. Okay, so this is the crux of trades platform. You can see the session. Okay, and have the clarity about this. So now coming to the recent question, that is, recently the RBI has released the report on currency and finance for the year 2022-23. The theme of this report is towards a greener, cleaner India. So we have discussed this report, the highlights of this report, and here you can see the highlights of this report. Here the report covers the four major dimensions that talk about that the climate change is happening very fast in the current period, as well as there are implications of climate change on the financial stability. There are the macroeconomic effects, as well as the policy options has to be taken by the government and the RBI to mitigate the climate risk. Okay, the climate change performance index was released, in which India was ranked 8th all over the world, and the India was highest amongst the G20 nations. India's goal of achieving the net zero target by 2070 would require that we do more efforts for energy conservation, and we favor the renewable energy to around 80% by the 2070-2071. That by 2070 we have to start using the 80% of the renewable energy, and the energy should be coming from the renewable energy. India's green financing requirement is estimated, that is, the green financing that should happen in India should be 2.5% of the GDP every year till 2030. Green financing means financing for the green activities, for the green projects. Balanced policy intervention has to be taken for the net zero greenhouse gas goal by 2070. Okay, so this is regarding the climate change performance index, in which the India is ranked 8th, and all over the country, all over the world, India is ranked 8th. The first, second, third positions were not given to any country. The 4th, 5th, 6th, 7th positions you can see here, as well as the CCPI. What does it stand for? What does it mean? It is presented here. Okay, so CCPI is an instrument through which the climate, the international and the national level, the countries are ranked as per their moves that they are doing for the climate. Now coming to the next question, that recently which of the following has been the focus area of the 2023 G20 Tech Sprint. So the G20 Tech Sprint was conducted by the Reserve Bank of India in collaboration with the Bank for International Settlement Innovation Hub. The focus area for this G20 Tech Sprint was what? So I'm getting the answer. Technology solutions to improve cross-border payments. So that is absolutely correct. Yes, it is absolutely correct. Technology solutions, the G20 Tech Sprint. This is a technological competition in which the solutions were to be taken for the improvement of the cross-border payments. Okay, so here the C is the right answer. You can read it. The three focus areas we have discussed them again and again, that the technology has to be developed for the anti-money laundering, for the combating of terrorist financing, for the CBDC, that is the central bank digital currency, for the multilateral transactions through the CBDC. The technology has to be developed. The technology has to be developed so that the emerging market and the developing economic currencies can be more utilized. So for that also, for the currencies to become more liquid, for the settlement to happen through these currencies, the platforms had to be developed. So for these, the solutions have been asked under the G20 Tech Sprint. Okay. Now coming to the next question, that is regarding the Udyam Assist platform. So when it has been established, you have to tell that, as well as you have to give the right answer of this one. When was Udyam Assist platform established? So I'm getting the answer D, that is absolutely correct. Ministry of Micro, Small and Medium Enterprises launched the Udyam Assist platform to facilitate the formalization of the informal micro enterprises, so that the informal micro enterprises can become formal. For those, this Udyam Assist platform was launched. Through the online generation of Udyam Assist certificate, the informal micro enterprises can become formal and they can get the benefits. They can get the benefits under the priority sector lending. So when they are the informal micro enterprises, they are not getting the under the priority sector lending targets, but if they get registered under the Udyam Assist platform, they get the Udyam Assist certificate, then they will start getting the benefits under the priority sector lending, and they can easily transfer from this Udyam Assist platform to the Udyam registration platform, where they will become complete formal. Okay. So yes, I am getting the answer Jan 2023. So that is correct. The Udyam Assist portal was launched in January 2023. So we have discussed about the Udyam Assist platform clearly, and the Udyam registration portal was launched on July 2020. So this also you can read, and this is the complete information regarding the Udyam registration platform and the Udyam Assist platform. Regarding the micro, small and medium enterprises, how they are divided, so that is also given here. A question has been asked regarding this in the previous year. So do see the division also. So this is the notification that was released by the Reserve Bank of India, that the Udyam Assist certificate will be given to the informal micro enterprises, so that the informal micro enterprises can become formal and they can have the benefits under the priority sector lending. So they can have the priority sector lending benefits and they can easily transfer. Interface has been created so that the informal micro enterprises can be easily transferred from the Udyam Assist platform to the Udyam registration portal. Okay, if they have the required documents then. Coming to the next question, that is regarding the KYC norms. So the updation has happened, amendment has happened in the Know Your Customer norms, in which if the domestic wire transfer is happening, wire transfer is the electronic transfer of good amount of money, big amount of money. So if the domestic wire transfer is happening through a bank in which you do not have the account, that means that bank does not have much information about you. So if you are doing the wire transfer, through a bank in which you do not have an account, then you will have to provide all the information regarding yourself and regarding the beneficiary. If you are doing the transaction of more than how much? Yes, everyone is giving the right answer. That is A. Shivam, Devendra, Aniket. Yes, correct. It is A, that is 50,000. So if the transfer, domestic wire transfer is happening of more than 50,000 and this is happening through a bank in which you do not have an account, then you have to give all the information. These are some of the definitions that you can read. The wire transfer is the electronic transfer of money. Electronic transfer of money can happen cross-border in between countries or domestically also. When it is the cross-border wire transfer, whatever money you are transferring, you have to give the complete information regarding the originator, that is you yourself, that is sending the money, and the beneficiary, that is getting the money. So originator is the one that is sending the money, or ordering regulated entity is the bank or NBFC that is sending the money. Okay, so this is the basic idea that you can read. It will be provided in the PDF, so you can read that also. Coming to the banks, financial institutions have to collect all the information if there is the cross-border wire transfer that is happening, so that the money laundering cannot happen. Okay, so in between the cross-border, all the information has to be collected. And when the domestic wire transfer is happening, so if the person that is sending the money is the account holder in the bank, then the bank should have all the information regarding the sender, because the sender is the account holder. So all the information should happen with the bank, as well as bank need to have the information regarding the beneficiary also. But if the domestic wire transfer is happening through a bank in which the person do not have a bank account, then the bank have to take all the information if the wire transfer is happening of more than 50,000. So domestic wire transfer of more than 50,000 and above, where the originator is not an account holder, the ordering regulated entity, the sender has to collect, the sender bank, the sender NBFC has to collect all the information. Okay, so MTSS was also defined in this notification. That MTSS means LRS is what? The liberalized remittance scheme is for what? Tell me very fast. The liberalized remittance scheme is for what? It is for the inward remittances or outward remittances. So liberalized remittance scheme is for the inward remittances or outward remittances. So it is for the outward remittances by the resident individuals. But what if the resident individuals are receiving the money? If they are getting the inward remittances, for that we have the money transfer service scheme, that is a quick and easy way of transferring the personal remittance from abroad to India. That is the inward remittances. For the inward remittances we have MTSS, and there is no limit on the MTSS. There is no limit defined for the MTSS if the money is being transferred in the bank account. But if you are giving in cash, then the limit is rupees 50,000. Okay, this is in cash, this is the limit in cash. Okay, so this is the MTSS, that is the scheme for the inward remittances. You can read the information that has been given regarding the MTSS. MTSS was mentioned in the previous notification, that's why I have given you the brief understanding of this. Now coming to the next question, that is, recently in May 2023, RBI announced to take part in the Global Financial Innovation Network, the first edition of the greenwashing tech sprint that has happened. So the GFIN, that is the Global Financial Innovation Network, has conducted the greenwashing tech sprint. The virtual tech sprint is hosted on the Dash Digital Sandbox. So you have to tell this. So the Reserve Bank of India has joined this greenwashing tech sprint. The greenwashing means that the product is being sold in the name of the green financing, that okay, this is for the green activities, this is for the green projects, when actually the green activity is not related, the green project is not related with the product. So this is greenwashing that is happening. So to combat the greenwashing, the technology has to be developed. For this, the technological competition is conducted by the GFIN, in which the Reserve Bank of India has also joined, and this virtual tech sprint is hosted on the Digital Sandbox of Financial Conduct Authority. The Financial Conduct Authority is chairing the GFIN. The FCA is chairing the GFIN, that is the Global Financial Innovation Network, and in this digital sandbox, on the FCA's digital sandbox, the competition is happening. Yes, green, but it ain't true. So coming to the next question, that is regarding the unclaimed deposits. So this is very easy. We have discussed it again and again. I'm not going to waste your time in this. The 100 days, 100 pays campaign has happened, in which the banks have to trace and settle the top 100 unclaimed deposits of every bank in every district of the country within 100 days. So according to the RBI, the balances in the saving or the current account which are not operated, which are not used, which are not touched, we can say, for 10 years, as well as the time deposits which are not claimed within 10 years from the date of maturity, they are classified as the unclaimed deposits. So the right answer here is D. And in which fund does this unclaimed deposits go? They go to the DEAF fund. That is Depositor Education and Awareness Fund. Now coming to the next question, that is recently in May 2023, the Reserve Bank of India approved the transfer of rupees how much as surplus to the central government for the accounting year 2022-23. So how much surplus has been transferred by the Reserve Bank of India to the central government? So here I am getting the answer C, and that is absolutely correct. The surplus of 87,416 crore has been transferred from the Reserve Bank of India to the central government. The contingency risk buffer is being maintained by the RBI for 2022-23. What is the percentage of the contingency risk buffer that the RBI is maintaining? Tell me this. Tell me this also, that what is the percentage of the contingency risk buffer that the RBI is maintaining? So yes, I am getting the correct answer. It is 6%. And what is the range of this contingency risk buffer? What is the range of this? Yes, Shruti has said 5.5%. To what percentage? What is the range of this contingency risk buffer? So it is 5.5% to what percentage? Okay, so it is the range of the contingency. Currently the contingency risk buffer is maintained at 6%. The surplus has been transferred of 87,416 crores. And yes, I am getting the answer. 5.5% to 6.5% is the range for the contingency risk buffer that the RBI keeps with itself. This is the buffer that the RBI has to keep with itself for the unforeseen situations. Okay, and the under section 47 of the RBI Act is the provision for the transfer of the surplus amount. Okay, so under this act, the provision is provided for the transfer of the profits to the central government as well as for maintaining the contingency risk buffer. It was the Bimal Jalan committee that has given this range, that this much contingency risk buffer the Reserve Bank of India should maintain. Okay, so this range was given by the Bimal Jalan committee that has reviewed the economic capital framework. Under this framework, the transfer of the surplus happens to the central government. Okay, so whatever is the income of the Reserve Bank of India, from this the expenditure of the Reserve Bank of India in the wages, in the salaries, in the capital expenditure, the benches that the RBI is buying and everything, the contingency risk buffer, and in all of these whatever the expenditure has happened, that has been deducted from the income. So whatever is left, that has to be paid to the central government under section 47 of the RBI Act. Okay. Yes, very good. So now coming to the next question. So the recently in May 2023, the RBI held a conference for the directors on the boards of public sector banks in New Delhi. So this meeting was happened, this conference happened, and the title or the theme of this conference was Governance in Banks Driving Sustainable Growth and Stability. So this was the only important point from this meeting, and here you can see that the conference has happened, and the banks were praised because they have supported the economy and they remained resilient, but they have to still keep on maintaining their operational resilience, and they have to continue maintaining their financial resilience. They have to strengthen the governance and the assurance functions. Now coming to the next question. So here, recently in May 2023, the RBI decided to withdraw the rupees 2000 denomination banknotes from the circulation. The exchange of rupees 2000 banknotes into banknotes of other denomination can be done by the business correspondents that are the extended arms of the banks. But the limit for the exchange per day per account holder is what? So it is, yes, I am getting the answers, no. So here you all have got confused. The answer is not C. Everyone is saying C. Here try to read the question very carefully. Business correspondence is written. So no one has given the right answer till now. Okay, I am getting the answer from Neetu, Viraj, RJ, Rohit. So they are saying A. Yes, it is A, 4,000. So be very specific when you read the question. That's why I have tweaked the questions now. Okay. So it is the public, they can deposit their rupees 2,000 banknotes, that has no limit. But if you are exchanging the currency, if you are exchanging the banknotes, then with the bank, the limit is rupees 20,000. Okay. So the limit is rupees 20,000 for the exchange with the banks, and the limit of the exchange with the business correspondence, that is the extended arms of the bank. So for them, the limit is rupees 4,000 per day for per account holder. Okay. So this is the limit. As well as the Reserve Bank of India regional offices, they can also exchange the rupees 2,000 notes. The limit is same, that is rupees 20,000. Okay. So for providing the deposit or exchange facility to people residing in remote areas, the banks are taking different initiatives. So this is all that you need to remember. The limit for the banks is rupees 20,000. For the exchange, the limit for the RBI regional offices is rupees 20,000. For the business correspondence, the limit is rupees 4,000 for the exchange. For the deposits, there are no separate limits. There are only the limits as per the accounts. Okay. So this was all. This you can read. Okay, we have discussed this a lot of times, that the banks have to return the rupees 2,000 notes. Nothing new here. As well as if there is any complaint that the person has to raise against the bank, they can raise the complaint within 30 days. The banks have to reply. If the banks are not replying to your complaint, you can go to the RBI Ombudsman scheme. Okay. Now coming to the next question, that is the Reserve Bank of India decided to withdraw the rupees 2,000 denomination note, and what is the time that has been provided to the people to deposit their rupees 2,000 notes or to exchange their rupees 2,000 notes. So this you have to tell. So I am getting the answer D here, and that is absolutely correct. So the timeline is given till 30th September 2023. So to complete the exercise in a time bound manner, the RBI has provided the adequate time to the public to deposit their rupees 2,000 notes or to exchange their rupees 2,000 notes, and the timeline is till September 30th 2023. Now the next question is regarding the Reserve Bank of India decided to withdraw the rupees 2,000 banknotes. The total value of these banknotes in circulation has declined from 37.3% of the notes in circulation to what percentage of the notes in circulation in the current period till March 2023. So I am getting the answer. Everyone is saying B, and that is correct. So there are mixed answers. Some are saying B, some are saying D. The right answer is B. It is 10.8% of the notes in circulation. Okay. So this is the percentage of the notes in circulation that is currently present in the country. Okay. So now coming to the next question regarding the Financial Inclusion Index that was in news. So this Financial Inclusion Index, this was released by RBI since 2021, and this index is based on So the Financial Inclusion Index is based on 3 sub-parameters. That is, which of the following is not among the 3 parameters? This you have to tell. Very easy question. You all must know about it. So yes, the answer is quantity. Yes, everyone is giving the correct answer. The answer is quantity. Okay. So here the 3 parameters are access, availability and usage. Okay. Access, usage and quality are the 3 parameters. Access, usage and quality are the 3 parameters. Access means that you should have the access to the products and the financial services. Then the usage, you should also be using it. Just by having the access, the financial inclusion is not happening. You should also be using it, as well as the products and the financial services should be of quality. The weightage, the excess is given 35% weightage, the usage is given 45% weightage in the Financial Inclusion Index, and the quality is given 20% weightage in the Financial Inclusion Index. In the second iteration of the Financial Inclusion Index that happened in March 2022, the index increased from 53.9 to 56.94. Now tell me that 0 means what? 0 Financial Inclusion Index means what? So first tell me that 0 financial inclusion index means what and 100 financial inclusion index means what? As well as read this question who have given this answer and then try to give the right answer of this question. Okay, 0 means, Shruti is saying 0 means exclusion, full exclusion. Yes, Shori is saying same. Yes, total exclusion. Very good. And Shruti is saying 100 means inclusion. So yes, 0 means full exclusion and 100 means full inclusion. That means 0 means that all the people in the country are fully excluded, and 100 means that all the people in our country are fully included in the financial system. So currently, what is the number? So currently the index is 56.4. That is more than half of the people of our country are included in the financial system. So now coming to this question, you need to have the basic understanding of the LEI. A question came in the previous year regarding the LEI. So this is the legal entity identifier. This is the your Aadhaar number. So that is the that identifies you, that okay, a particular Aadhaar number is given to a particular person. Similarly, the LEI, this is the particular unique global identifier. So you have the unique identification number, that is Aadhaar card number. LEI is the legal entity identifier, that is the unique global identifier that identifies the legal entities that are participating in the financial transactions around the world. Okay, so this is correct. The first statement regarding the LEI is correct. The second statement is RBI directions presently mandate non-individual borrowers having aggregate exposure, total loan of about, total exposure, total transactions, financial transactions of above rupees 25 crore to obtain LEI code. So now, for now, this is the number, this is the number. If they are doing more transactions than this, then they have to get the LEI. Okay, LEI is a 20-digit alphanumeric code. So recently what has happened, that the SEBI, Securities and Exchange Board of India, has introduced the LEI system for the issuers that have listed or planning to list in the non-convertible securities, securitized debt instruments and the security receipts. So the incorrect statement is B. The A and C are absolutely correct. The incorrect statement is B. Yes, 25 crore. So here you can see that the total exposure, if the non-individual borrower has the total exposure of more than 25 crore, then they need to have the LEI, then they need to have LEI currently. But by 2024, April 30, 2024, if the total exposure of the non-individual borrower is above 10 crore and up to 25 crore, they also need to have LEI. So a non-individual borrower by 2025, a non-individual borrower that have more than 5 crore, 5 crore and above and up to 10 crore, they also need to have the LEI. So presently, Reserve Bank of India mandates the non-individual borrowers that have the aggregate exposure of above 25 crore to obtain LEI. I have shown you that by 2025, even the non-individual borrowers that have taken the total loan of more than 5 crore up to 10 crore, they also need to have LEI. Okay, and the SEBI, the current context I have told you that the SEBI has said that these particular entities, they also need to have LEI. Okay, now coming to the, so you can read the basic idea of LEI code. This is the alphanumeric code, 20 digit it is. This is the code that is given to the large entities that are doing the financial transactions. Okay. Now coming to the next question, that is regarding the FSDC. So try to give the right answer of this one. So here it was proposed by Raghuram Rajan committee. Okay, so it is not Bimal Jalan committee on financial sector reforms. It is non-statutory autonomous body. RBI governor is not the chairperson of the council. It is the finance minister that is the chairperson of the council. So all the statements are incorrect, and that's why E is the correct answer. Okay, so it was the Raghuram Rajan committee that proposed for this FSDC. Okay, that is Financial Stability and Development Council. The finance minister is actually the chairperson of this committee. The chairperson is finance minister, and the subcommittee of the FSDC, the chairperson of the subcommittee is the RBI governor. So this committee is non-statutory. It is not lawful that compulsory it has to be made, but it is autonomous body. Okay, so recently the meeting happened, and that's why you need to have the basic understanding of FSDC that has been provided here. Now coming to the next question, the Union Ministry of Finance has included dash carrying financial transactions on behalf of their clients as reporting entities under the ambit of Prevention of Money Laundering Act 2002. So which of the following entities have been brought under the ambit of the reporting entities? So they have become the reporting entities. If they see that any kind of money laundering is happening, they have to inform the FIU, that is the Financial Information Unit. Okay, so here I am getting the answer C, and that is absolutely correct. So the cost and work accountants are the one, the accountants are the one, the company secretaries are the ones, because they are handling the accounts. So they know that the money laundering is happening or not. So they have become the reporting entities under the Prevention of Money Laundering Act 2002. Okay. So now coming to the next question, that is which of the following statements is or are incorrect with regards to e-bank guarantee. So currently e-bank guarantee is quite in news, and here are some of the information regarding the e-bank guarantee. You have to tell that which of the following is not correct. Okay, is incorrect. So I am getting the answer E here. So try to give the right answer of this one. It is commercial instrument used as a legal contract. So e-bank guarantee, it is the guarantee that is given by the bank. So yes, it is a commercial instrument that is used as a legal contract. The C is not the correct answer. C is not the correct answer. It is a substitute to paper-based guarantee. It is the electronic bank guarantee. So it is going to substitute, or it is a substitute for paper-based guarantee. Here the right answer is B, that is absolutely correct, because the e-bank guarantee are issued by the NESL in collaboration with the banks. So it is not the RBI, it is actually the NESL, that is the National E-Governance Services. So it is the National E-Governance Services Limited that is collaborating with the banks to issue the electronic bank guarantee facility. So it is not the RBI. Okay, a bank acts as a guarantor and undertakes an obligation to pay the beneficiary a certain amount of money specified in the guarantee if the beneficiary is getting a loss due to the other person. Okay, and for this the bank will get the fee. Okay, so the guarantee has to be taken by the bank. Okay, so this is the e-bank guarantee that you can read. Okay, now coming to the next question, that is, as per the recent news, the public sector banks total profits has reached to a high level, and you have to tell that in percentage terms which of the following banks has the highest profit growth. So you can understand that in the number terms, in the number or in the amount terms. In the amount terms, the State Bank of India is the biggest bank of our country, so it has the highest profits. But here it is asked that in the percentage terms, the highest growth in the profits has been seen by which bank? So I am getting the answer A, that is correct. It is Bank of Maharashtra. So in the amount terms, the highest profit is of the State Bank of India, but in the profit growth terms, the Bank of Maharashtra has got the highest profit. Okay, in the percentage terms. Now the lowest NPA, the lowest net non-performing asset is of which of the following bank? So again in this also the Bank of Maharashtra is the one that has got the lowest non-performing asset. Okay, now coming to the next question. So here you can see the details. Coming to the next question, that is easily you can answer this question. The Reserve Bank of India has transferred the surplus to the Government of India under which section of the Reserve Bank of India Act 1934. So we have just discussed this, that it is section 47 under which the profits are transferred, the surplus is transferred to the Government of India. So now coming to the next question. That is, which of the following banks has introduced the digital distribution platform Smart Sathi to connect the business correspondents that are the extended arms of the bank that can undertake many of the facilities that the bank provides. Okay. And the business facilitators that are also connected with the bank, but they are the small ones that are not doing much of the services for the bank. They are only doing the small services for the bank. So the Smart Sathi has been launched to connect the business correspondents and the business facilitators with the bank. So which of the bank has released this Smart Sathi? So I am getting the answer here, SDFC Bank. That is absolutely correct. It is the SDFC Bank that has launched the Smart Sathi so that the business correspondents and the business facilitators can be joined with the bank. Okay. So now coming to the next question, that is regarding the Prava. So try to give the right answer of this one. So here it is the Reserve Bank's Advanced Supervisory Monitoring System. So it is Daksh. So Daksh is the Reserve Bank's Advanced Supervisory Monitoring System. Core banking solution of RBI is eKuber. Collection of unclaimed deposits. For this there is no app that has been developed. The ease to obtain license authorization. This is done through Prava. Okay, so Prava is the platform so that the ease of the licensing, authorization, validation can be provided to the regulated entities under the Reserve Bank of India. So here the correct answer is D. Yes, absolutely correct. So Prava is the platform for regulatory application, validation and authorization so that the regulated entities under the Reserve Bank of India can easily have the license, authorization and validation for different things through a single platform that is going to be Prava. Okay. So now coming to the next question, that is regarding the bank in India. So that are operating in the International Financial Services Center. So they are called the International Banking Units. Okay. So the International Banking Units or the International Banking branches of the banks. So they are able to transact in the INR non-deliverable foreign exchange derivative, that is NDDC. So they can provide the NDDC to the non-residents and they can trade the NDDC among themselves. This was with effect from June 1, 2020. So now in June 2023, the notification has been released that the authorized dealer category 1 banks that are operating the international banking units or that are operating the IFSC banking units, they can offer the NDDCs, they can often offer this instrument to the resident non-retail users. That are non-retail means to the companies usually. So resident non-retail users can buy this NDDC from the IFSC banking units from the branches that are operating there for the purpose of hedging their risk. Okay, such transactions shall be cash settled in INR. So if the settlement is happening for the NDDC, it should happen only in Indian rupees if the residents are involved, if the non-retail users residents are involved. But the authorized dealer category 1, if they are settling the NDDC with the foreigners, with the non-residents, then they can transact in the foreign currency, they can settle in foreign currency or in the INR. Even if they are transacting among themselves, if the IBUs are transacting the NDDCs among themselves, then also the settlement can happen in INR or foreign currency. But if the settlement is happening with the resident non-retail users, then the settlement should only happen in INR. So what you have to remember, that the NDDC will be provided to the resident non-retail users. The settlement of these NDDCs should only happen in INR if the resident non-retail users are engaged. With the others, we do not care. Okay. So this was the whole news article. We have already discussed this before also. So you can read this. Okay. So this was only so the IBUs, they were allowed to transact the NDDCs among themselves, or they were allowed to provide this to the non-residents. But now it has, from June 2020, they were allowed for this. But now since June 2023, it has been said that you can provide this NDDC to the resident non-retail users, but the settlement should happen in Indian rupees only. Now coming to the next question, that is regarding the CICs. So try to answer this one. Okay, so let's go fast. So the RBI proposed to put in place the measures to further enhance the consumer protection and improve the grievance redressal mechanism. So it has been said that the CICs will have to compensate they need to have the compensation mechanism for the delayed updation or rectification of the credit information. They need the provision for the SMS or email alerts to the customers when their credit information is being accessed by the CICs, by the credit information companies. The time frame for the ingestion of the data has to be received by the CICs from the credit institution. The credit institutions, the banks and the NBFCs, they have to provide the data to the CICs in a time-bound manner. Disclosures relating to number and nature of the customer complaint has to be done on the website of the CIC. So only the C is not among the proposals by the RBI. So you can read the proposals by the RBI. Okay. Now coming to the next question, that is regarding CICs. So RBI has simplified the application process for the registration of the core investment companies by reducing the number. So in previous question we have discussed about the credit information companies. Now we are discussing about the core investment companies. So for them the registration process has been made easier. They need to only provide 18 documents now. Before they were providing 52 documents. Okay, so this was in news, so that's why it was important. Now coming to the next question, that is regarding the framework for acceptance of green deposits. So which of the following is incorrect, that you have to tell. So I am getting the answer C, that is not correct. So the framework shall come into effect from July. So yes, C is correct. So you have to tell that which of the following statement is correct regarding the acceptance of green deposits. Here the correct answer is C. So the framework shall come into effect from June 1, 2023. The provisions, so this is wrong. The provisions of these instructions shall be applicable to the scheduled commercial banks, excluding these and including the NBFCs. So on NBFCs also this is applicable. So this is also wrong. The correct is C statement, that is green deposit has been defined as a interest bearing deposit that is received by the regulated entity for a fixed period, and the proceeds of the green deposits have to be given. The loan from the deposits have to be given for the green financing, for the green activities, for the green projects. So this is the correct statement. The green deposit shall be denominated in Indian rupees only. This is incorrect. So only the C statement here is correct. Only the C statement is correct. Yes, it is June 1, 2023. So the C statement is correct. That is green deposits means an interest bearing deposit that is for a fixed period. The proceeds of this deposit will go to for the financing, green financing. Okay. So here June 1, 2023, this framework has come into effect from June 1st, 2023. So this was applicable for the scheduled commercial banks, including the small finance banks, and for all deposit taking NBFCs. For all deposit taking NBFCs, this framework was applicable. These are the exclusions and these are the inclusions that we have already discussed. These are considered to be green activities and green projects on which the green deposits, for which the green deposits can be provided as loans. These are the exclusions. For this, the loan cannot be provided from the green deposits. Now coming to the next question, that is RBI announced the development of a software application that will be called what? For the processing of the application for the full-fledged money changers, that are the small money changers that are allowed to do. So the full-fledged money changers are the ones that are allowed to sell and buy the foreign exchange for the travel purposes. So they can provide the foreign exchange for the travel purposes, if you want to go for your personal visit, if you want to go for the business. The non-bank authorized dealers category 2. Category 2 are the ones that can provide the foreign exchange for the non-trade current account transactions. Okay. So non-bank means banks are the ones that can directly connect with the RBI. For the non-bank authorized dealer category 2 and for the FFMCs, the app that is AP Connect has been launched. Okay. So AP Connect has been launched. So here you can read, we have already discussed about the MTSS scheme. Full-fledged money changers are the ones that can provide the money for the, travel purposes. Okay. Authorized dealer category 2 are the ones that can provide the money, the foreign exchange for the travel purposes for the non-trade current account services. Okay. So now coming to the next question, that is RBI released the Reserve Bank of India outsourcing of information technology services. So this directions has been released by the Reserve Bank of India. For which of the following directions, for which of the following entities the directions will not be applicable? So these directions, that is for the outsourcing of the IT services, these directions are applicable for the credit information companies, for the non-banking financial companies in top, upper and middle layer, for the Exim Bank, for the NAFID also, these are applicable. But the primary urban cooperative banks that are in tier 3 and tier 4, for those the directions are applicable. So here you can see that for the tier 4 and tier 3 and tier 4 urban cooperative banks, the directions are applicable. It is not applicable for tier 2 and tier 3, tier 1 and tier 2. Okay, so the directions are not applicable for tier 1 and tier 2. It is only applicable for tier 3 and tier 4 urban cooperative banks. Okay, and it is applicable on all India financial institutions. So now coming to the next question, I hope you will be easily able to answer this question. So regarding the master direction on the outsourcing of information technology services, see, the grievance redressal has to be done by the banks itself, by the regulated entities, because the customers are getting connected with the regulated entities. We do not care that who the IT services are getting outsourced to. If I am connected with the SBI, if I am connected with PNB, they have to cater to my request. So the redressal, they have to cater to my complaint. So the redressal mechanism, the complaint has to be redressed by the regulated entity only. The regulated entity shall assess the impact of concentration risk. Concentration risk. So the concentration risk is present when the multiple outsourcing is happening to one or a few service provider. So this is a big risk, and it is not country risk, it is concentration risk when many of the services, when many of the outsourcing services is done by only one or a few service provider. So here the right answer is B. This is the incorrect statement because it is not the country risk, it is the concentration risk. Regulated entities shall ensure that their rights and obligations and those of each other are there, and it should be present in a legally binding written agreement. The engagement of a service provider based in a different jurisdiction is allowed though there is the presence of country risk, because in different countries there are the different rules and regulations, and so the regulated entity, when it is choosing the service provider from US or from Britain or from any other country, it has to be careful that the regulated entity is following the rules and the service provider is following the rules and regulation that is set by the regulated entity. So here the correct answer is B, because this is the incorrect statement that you had to tell. Okay. So these are the norms that we have discussed again and again. The service provider from other countries are allowed, though there is the country risk that has to be catered. For this, appropriate contingency measures have to be taken. Exit strategies have to be developed by the regulated entity if it is engaging with a service provider of some other country. Okay, so these are the norms that you can read. We have again and again discussed about the outsourcing of the IT service master direction. Okay, so concentration risk is present when the outsourcing is happening. If the outsourcing is happening to one service provider, if multiple outsourcing is happening to one service provider, that service provider is becoming bankrupt, that service provider is facing any problem, so that problem will be faced by the regulated entity also. As well as the legally binding agreement should be present for the regulated entity and the service provider to know the rights and the obligations. Now coming to the next question, that is regarding the provisioning norms. So read this question and try to give the right answer of this one. So here RBI revised the norms of provisioning for the standard assets by the primary urban cooperative banks under the recent. See what has happened, that the urban cooperative banks have been divided into 4 tiers. Tier 1, Tier 2, Tier 3 and Tier 4. Now before, the urban cooperative banks were only in Tier 1 and Tier 2. Before, the urban cooperative banks were only present in Tier 1 and Tier 2. Now the urban cooperative banks have been divided in 4 tiers. So the provisioning norms that were there for Tier 1 and Tier 2 has to be introduced for the Tier 3 and Tier 4 also. So here I am getting the right answer, that is A. Yes, A is the right answer. So as per the provisions, the direct advances that is given to the agriculture and the small and medium enterprise sector. So the standard asset, that is good asset, that is good loan, for that good loan also the provision has to be maintained by the urban cooperative banks. That is for the agriculture and the SME sector, for the good loan the provision is to be kept 0.25% of the fund of the portfolio. Okay. So here you can see for Tier 1 and Tier 2 there were the norms. Now it is for all the tiers, and for all the tiers the norms are same. 0.25% for the standard loans that is provided to the agriculture and the SME sectors. 1% of the provision that has to be kept for the standard asset for the good loan that is provided to the commercial real estate sector. And for advances that is given to the commercial real estate residential housing, the provision has to be maintained of 0.75%. For all the other advances, for all the other kind of advances, the provision has to be maintained of 0.40. So the Tier 1, Tier 2, Tier 3, Tier 4 have to maintain these provisions. Now the question comes that the Tier 1 UCBs, they were maintaining 0.25% of the provisions for all the other advances that were given by the Tier 1 UCBs. Now what percentage they have to maintain? Okay, what percentage of the provisions they have to maintain for all the other loans, because the Tier 1 urban cooperative banks have to maintain same provisions as the other tiers. So I am getting the answer B here. That is absolutely correct. Okay. So here by 2025, the timeline has been given to them. By March 31st, 2025, they have to start maintaining 0.40% of the provisions for all the other loans and advances. Okay, that is maintained by the other tiers. So the Tier 1 also have to maintain the same provisions now. Now coming to the next question, that is regarding the general credit card. So which of the following statement is true regarding the general credit card facility? So it was the general credit card scheme in 2013. Now in 2023, the RBI has said that it is not a scheme now, it is a facility, and the instruction shall apply to all the banks which are eligible to issue the credit cards only. So it is incorrect, because here the debit cards are also mentioned. GCC shall be issued in the form of credit card. This is correct. It is the general credit card scheme. So GCC shall be issued in the form of credit card. Individuals or entities sanctioned working capital facility for the non-farm entrepreneurial activities which are eligible for classification under the PSL, that will be called the GCC. So the individual entities that are going to get the working capital facilities for the non-farm entrepreneurial activities, for them the GCC should be issued, okay, for only the non-farm entrepreneurial activities. So in 2013 the GCC scheme was out, in which the smart card, the debit card, the loan was provided through the GCC scheme for the non-farm entrepreneurial service in the form of debit card, credit card cum passbook. But now it has been said that only through the credit card, through the general credit card, you can provide the facility, okay, for the non-farm entrepreneurial activities. You can provide the loan only through the credit card, not through the debit card, not through the other kind of cards. Okay, so this is the information that has been provided in the 2023. It has been said that the GCC scheme is now becoming GCC facility. Only the credit card should be issued, not the different kind of card under the GCC. Now coming to the next question, that is regarding the draft circular that has been released by the Reserve Bank of India for the fair lending practice. So the REs shall not introduce any additional component to rate of interest. This is true. It has been said that the penal interest will not be levied. The penal interest will not be levied only the penal charge can be levied now. That is the penalty if charged for the default or the non-compliance of the material terms and conditions, that should be in the form of penal charges. Okay, so the penalty should be only in the form of penal charges. If the credit risk profile of the borrower is undergoing change, then the credit risk premium can be changed by the bank. So that is also true. Because the credit risk profile, a person is becoming more risky because the person is not giving the other loans. So of course the premium of that person should be increased. We should punish that person, right? So whenever reminders for payment of the installments is to be sent, then the penal charge should also be mentioned to the people. The penal charges in case of loan that is sanctioned to the individual borrowers, so that should not be greater. So the penal charge for the individual borrowers should not be higher, than the penal charge that is applicable to the non-individual borrower. So here E is the correct statement, and these are the applicable entities under the fair lending practice. This is the draft guidelines, and these are the norms under the draft guidelines that we have discussed again and again. The main crux is that the penal interest should not be levied, only the penal charge should be levied, that is directly understandable through the people. And you can read the other instructions also. We have discussed this. You can see the previous revision sessions in which we have understood everything in detail. Okay. So this is here for revision. You can read this. Now coming to the second question, that the KYC norms have been amended and the beneficial owner. So in the case of natural person, I am going to a bank and I am opening the account. If there is anything wrong that is happening through the bank account, I will be caught. I will go to jail. Okay. But in the case of company, in case of a in case of a legal person, that is a company, in that case, who should be caught? If the money laundering is happening through the bank account, who should be the person that should be caught? So it is the beneficial owner. Now who is the beneficial owner? So the amendment has happened on the norms that the beneficial owner will be that person that has the controlling ownership interest in the company, and is having the ownership or entitlement to more than 10% of the shares or the capital or the profits of the company. So before for the trust it was 15%, and for the companies it was 25%, that the beneficial owner should have more than 25% or more than 15%. More than 15% for the trust and more than 25% for the companies. Now it has been revised to 10%. Okay. More than not, it was of 25% or of 15%. It was of 25% or of 15%, that has been changed to of 10%. So this is all that you need to understand from this notification, that the beneficial owner will be the one that have the share of 10%. Okay, that will be called the beneficial owner. Now coming to the you can read the definitions that has been provided in the amendment. So the correspondent banking, the correspondent bank is the one that is providing the services to the respondent bank. So that is the correspondent banking, that one bank is providing the services to the other bank. The one bank that is providing the service is the correspondent bank. The bank that is taking the service is the respondent bank. So these are the definitions that have been specified in the master direction, okay, in the norms. And this is if the bank is thinking that this person is suspicious, then the bank do not have to do the CDD, that is the customer due diligence. The bank should directly inform the financial intelligence unit that this person is suspicious, and the bank should do the suspicious transaction reporting. Okay. Now coming to the next question, that is regarding the LRS. Now we have discussed the LRS scheme a lot. So try to give the right answer of this one. So the LRS is unavailable to the corporates, partnership firms, HUF and the charitable trust. So this is correct. The LRS is only provided for the resident individuals for the outward remittances to send the money. It is part of the Foreign Exchange Management Act 1999, which lays down the guidelines for the outward remittances from India. This is correct. The resident individuals, they can avail the facility of the foreign exchange facility. They can have the foreign exchange with themselves if they are going out, if they are going to travel to other countries. This is till a limit of 2,50,000. So this is incorrect. 2,50,000 is the limit that has been specified under the liberalized remittance scheme. Everyone is giving the right answer. That is absolutely correct. Yes. So here RBI introduced the LRS in 2004. This allows the Indian residents to make individual foreign exchange transactions with relative ease. The capital account remittances are not approved that are directly or indirectly to countries that are identified by the FATF as non-cooperative countries. Okay, so regarding the liberalized remittance scheme, the liberalized remittance scheme is the scheme for the resident individuals to send the money to other countries, okay, for their children that are studying abroad, for the private visit, for going abroad for employment. So they can send the money abroad, or they can take the foreign exchange, they can have the foreign exchange facility, they can do the foreign exchange conversion, okay, and take the money. So this is the scheme that you can read. We have discussed this scheme a lot of time. So now read this. I have provided all the information in the PDF, in the PPT. So you do not have to go here and there to search everything. So that's why I am providing everything to you here, so that when you go to the PPT, you can read everything. Okay, you do not have to go here and there to search everything. So central bank has removed the requirement to repatriate funds remaining idle in the foreign currency account for up to 15 days in the IFSC. So what happens that if you are sending money to the International Financial Services Center, it will be considered under the liberalized remittance scheme, because you are sending the money to the foreign platform. So under the liberalized remittance scheme, if you are sending the money for the IFSC, it will be considered as the foreign transfer of the money, and if you have to bring the money back if the money is remaining idle in the foreign currency account, if the money is remaining idle for 180 days, you have to bring it back now. Before it was 15 days, now it has been changed to 180 days. So for the foreign countries, the limit was 180 days. Now the same limit has been introduced for the IFSC also. So in 2021, the limit was 15 days, that if the money is staying idle for 15 days, you have to bring the money back. Now the timeline has been increased to 180 days. If the money is remaining idle for 180 days, the money has to be brought back. Next question is regarding, now recently in June 2023, the RBI has directed the authorized persons, they have to facilitate the remittances by resident individuals. Like if they are sending the money under this purpose in the IFSC, that will also come under the liberalized remittance scheme. Okay. So if the people are sending the money for which of the following? See, if you only want to see the question and have the answers, then you can read through the PDF. If I'm not going to explain again, the queries will come, right? So what do you want? Should I just move forward with the questions? If that's what you want, then all of you can write this, and then we will move forward with the questions in a hurried manner. I will try to go with the questions a little faster. It is for the services abroad. Okay. So the notification has been released by the Reserve Bank of India recently in June itself, that the studies abroad. So before it was the thing that if the remittance, under the liberalized remittance scheme, the money is being sent for making the investment in the IFSC in the securities, okay, for the securities that are not issued in the India. Now it has been said that for studies abroad also, the money can be sent to the IFSC under the liberalized remittance scheme, okay. Okay, then next is, which of the following statements is or are incorrect with regards to the recently introduced interchange fee on UPI transaction? So the interchange fee has been introduced for the PPIs, that is the prepaid payment instruments. The NPCI has notified an interchange fee of up to 1.1% on the merchant UPI transactions carried out using PPIs. So if you are using the PPIs to pay to the merchant, then the fees will be levied of 1.1% on the merchant, and the interchange fee will be levied if the UPI payments are happening of more than rupees 2000. So here this is the incorrect statement. Interchange fee will not be levied on person to person transfers or the person to peer to peer merchant transfers. So peer-to-peer merchants are which? So the small merchants are the merchants that are having the inward UPI transaction of less than or equal to rupees 50,000. So those are the small merchants. So for those kind of merchants, the interchange fee will not be levied, and this is the interchange fee will not be applicable on the peer-to-peer and the peer-to-peer merchant transactions between bank accounts and the PPI wallets. And the limit, the interchange fee is up to 1.1% that will be levied on the merchant. Now coming to the next question. That is, as per IRDAI, which of the following has or have not been designated as the domestic systemically important insurers? So which of the following is the correct answer? So the New Indian Assurance Co Limited as well as the Life Insurance Corporation of India, General Insurance Corporation of India, these are the insurers that are considered as the domestic systemically important insurers. They are too big to fail. The United India Insurance is not among the domestic systemically important insurers. Okay. So now coming to the next question, that is, SDFC Limited has merged with the SDFC Bank. So according to the RBI norms, the commercial banks must extend dash percentage of the, so the commercial banks have to provide what percentage of the A and BC to the priority sector. So they have to provide, the commercial banks have to provide 40% of their A and BC to the priority sectors, adjusted net bank credit. Okay. So according to the RBI, this is the provision for the commercial banks. The SDFC Bank has got some extension in this. Okay. Some relaxation in this. So recently RBI has provided the SDFC Bank 3 years to comply with the priority sector lending norms, and the norm is that 40% of the adjusted net bank credit has to be maintained by the commercial banks for the priority sector. Coming to the next question, NPCI Bharat Bill Pay Limited has launched the NOCS platform. NOCS platform will be going live with the first set of dash banks in ONDC. So I will be going a little faster now. Okay. So try to understand, and you can read everything in the PDF. I have provided everything in the PPT. So you can read in the PDF. Okay. So let's go a little fast now. NOCS platform will be going live with the first set of 5 banks. So here ONDC, for the ONDC platform, that is the Open Network for Digital Commerce. We have discussed this in the session. This is a non-profit company, and this is the platform that is open network. All the sellers, all the buyers can come and interact with each other. Okay. Through any of the app, So for the ONDC platform, the NPCI Bharat Bill Pay Limited has brought NOCS that will provide a easier transfer of money between the buyers and sellers, and the first set of 5 banks have gone live on the ONDC on the NOCS platform that is going to ease the transfer of money. Okay, so the 5 banks are AU Small Finance Bank, Axis Bank, SDFC Bank, IDFC First Bank and Yes Bank. So the ONDC, the kind of transfer that happens, you can see it here. So now coming to the next question, that is regarding the small finance bank. If the small finance bank have to convert from the authorized dealer category 2 to authorized dealer category 1, which of the following norms the small finance bank should be following? The small finance bank should have completed at least 2 years of operation as authorized dealer category 2, that is correct. SFB should have included in the second schedule. So the small finance bank should be included in the second schedule to the RBI Act 1934. Minimum net worth should be rupees 500 crore of the small finance bank, that is correct. Capital to risk weighted asset ratio should not be less than 15%. The capital adequacy ratio should not be less than 15%. Then that small finance bank can convert from authorized dealer category 2 to authorized dealer category 1. So these are the norms these are the eligibility for the small finance bank to operate as authorized dealer category 1 that you can read. Okay. Now coming to the regarding different authorized dealer categories, there is the category 1, 2, 3, and then there is the full-fledged money changers. So you can read the categories, and I hope you already know about the different categories of authorized dealer. Now coming to the next question, Reliance General Insurance has become the first company to start accepting the premium payments, insurance payments in the CBDC, that is the central bank digital currency, through a partnership with which of the following banks? So here the answer is Yes Bank. Okay, so the Reliance General Insurance Company, it has become the first general insurance company that has collaborated with the Yes Bank for the CBDC payments, for the acceptance of the central bank digital currency for the insurance payments. Okay, so the Yes Bank, there were the 4 banks that started operating the e-rupee for the retail segment, that started providing the e-rupee for the retail segment. Okay, in the first tranche there were the 4 banks. So the CBDC we have discussed in depth. We have discussed the e-rupee for the retail pilot also. For the retail segment, the pilot was launched of the e-rupee. Okay, so we have discussed this. You can see the session. Now the next question is regarding the WMA. So RBI, in consultation with the Government of India, has recently decided that the limit for the ways and means advances for the first half of the financial year 2023-24 will be what? So RBI, in consultation with the Government of India, has decided the limit for the first half of the year of the WMA, ways and means advances. Here the answer is 1,50,000. This is the limit that has been decided. The ways and means advances, they are the short-term advances, loans that is taken by the Government of India from the Reserve Bank of India. So here, try to give the right answer of this one. I have told you that it is a short-term loan facility that is taken by the government from the Reserve Bank of India. The state governments as well as the central government can take these advances from the Reserve Bank of India. These are the advances that is given for 90 days. The facility is not exclusive to the union government. It is provided for the state government also. The RBI charges interest equal to the repo rate on the loans that is given under the ways and means advances. If the overdraft is happening, that is on time, the government is not repaying the money, then the 2 extra percentage, that is repo rate is 6.50% plus 2 extra percent, that is 8.50%, the government will have to give to the RBI on the overdraft. So this last statement is correct, that the repo rate is the interest rate on the WMA. So only third statement was correct. Okay, now coming to the next question, that is the Har Payment Digital. It is the mission that was launched under the Digital Payments Awareness Week. The theme of the campaign is what? It is Digital Payment Apnao Auron ko bhi Sikhao, that adopt digital payments and teach other also. So this was the Digital Payment Apnao Auron ko bhi Sikhao. This is the Digital Payment Awareness Week that was conducted by the Reserve Bank of India. Okay, so this was in the Har Payment Digital. Now coming to the next question, that in the Digital Payment Awareness Week, there was the Har Payment Digital mission that was conducted. Other than that, it was also said that the payment system operators were to adopt how many villages across the country and convert them into the digital payment enabled villages. So there were the 75 villages that the payment system operators were going to adopt. Okay. So these were the steps that were taken by the Reserve Bank of India in the Digital Payment Awareness Week. The regional offices of the RBI conducted the awareness and outreach programs, which also formed the part of Jan Bhagidari events under the G20 theme. Okay, as well as the 75 Digital Villages program was launched, in which the payment system operators were to adopt the 75 villages across the country to convert them into the digital villages. Now the next question is regarding the Reserve Bank of India, and the Dash has signed an MOU for collaborating on various emerging areas of the fintech financial technology, especially for the cross-border interoperability of the CBDCs, the central bank digital currencies. So here I am getting the answer A, that is correct. It is the Central Bank of United Arab Emirates that have collaborated, that have signed an MOU with the Reserve Bank of India. Okay, with the Reserve Bank of India, and the both the central banks are coming together so that they can develop the CBDCs, they can develop the central bank digital currencies, and they can see the interoperability between the two CBDCs. Okay. Now coming to the next question, that is Shaktikanta Das, Governor of the Reserve Bank of India, has laid the foundation stone for the establishment of a greenfield data center and enterprise computing and cyber security training institute in which of the following? So here the answer is E, that is absolutely correct. Tapan has given absolutely correct answer. It is Bhubaneswar, Odisha, in which this is to be launched. Okay. So this has been, the foundation stone has been laid for these in the Bhubaneswar, Odisha by the Reserve Bank of India. Now coming to the draft guidelines for the minimum capital requirement for the market risk. This was the directions, guidelines that were released by the Reserve Bank of India. A trading book is the portfolio. You have to tell that which of the following is incorrect. So a trading book is a portfolio. So there are the two books, trading books and the banking book. In the banking book, the loan is mentioned because the bank is there. In the trading book, the investments. Trading means the trade that is happening in the market. So the trading book is the portfolio of the financial instruments that is held by the bank. The financial instruments like the securities, the bonds, the shares and such. The new norms draw a boundary between the banking book and the trading book. That is correct. Banking book is the book that contains the loans, the assets and the deposits. The trading book is the book that contains the trade related, like the market related things like the bonds, securities and such. The new guidelines allow ban the short positions on any instrument except in derivatives and central government securities. So short position cannot happen other than except in derivatives and in the central government security. So here the right answer was C. C is the incorrect statement. A and B are the correct statements. Okay. So you can read the directions. We have discussed these directions in the revision session. Okay. So if you want to understand directions and everything, you can understand it through the revision sessions. So just the division has been made, the separation has been made in the trading book and the banking book. In the trading book, there are all the securities, there are all the shares and the investments that are mentioned in the trading book. So the trading book has market risk because the fluctuations, the volatility in the market is present. So in the trading book, there is the market risk that is present. In the banking book, the loans are mentioned. So in the banking book, there is the risk of credit, that their credit failure can happen, the credit is not coming back, so there is the credit risk. Okay, so banking book, trading book. In the banking book is subject to credit risk and the trading book is related to market risk. The capital requirement for the specific risk, that is in the market, in the particular bond, in the particular security, there can be some specific risk. Okay, and there can be the general market risk, that the market is having the fluctuations and the whole bonds and the whole market is facing the problem. So for the specific risk, for the general market risk, the 9% of the each has to be kept. 9% of the capital for each of the risk has to be kept. So here you can read the definitions, you can have the complete clarity. Now coming to the next question regarding the urban cooperative banks, regarding the capital adequacy ratio and the net worth. So I hope you will be easily able to answer this question. Recently, RBI notified regarding the instructions for the revised regulatory framework for the urban cooperative banks, net worth and capital adequacy that will come into effect from 31st March 2023. As per the framework, which of the following statement is or are incorrect? So this you have to tell. So the urban cooperative banks that do not meet the minimum net worth requirement shall achieve the entire stipulated minimum net worth on or before March 31st, 2028. Okay, so this is correct. Tier 1 urban cooperative banks that are working in the single district, they have to maintain minimum net worth of 2 crore. As well as tier 1 UCBs, they need to have the minimum CRAR of 9%. So this is regarding the tier 1 UCBs. If they are working in the single district, they need to have the minimum net worth of 2 crore. All other UCBs need to have the minimum net worth of 5 crore. They have to have the complete minimum net worth by 2028. The urban cooperative banks are divided into 4 tiers that you can see. And now coming to the next question. So the minimum CRAR that the tier 2 to tier 4 UCBs have to maintain is what? So tier 2 to tier 4 UCBs have to maintain the minimum CRAR, capital adequacy ratio of 12%. Okay. So the tier 1 UCBs have to maintain the minimum CRAR of 9%. Tier 2 to tier 4 UCBs have to maintain minimum CRAR of 12%. For the tier 2 to tier 4 UCBs to maintain the minimum CRAR of 12%, this is the path that has been provided. Okay. Now coming to the next question. The 601st meeting of the Central Board of Directors of the Reserve Bank of India happened. Now, who is the chairman of the Central Board of Directors meeting? So, very easy to answer. It is the Shaktikanta Das, that is the Governor of the Reserve Bank of India, that chairs the Central Board of Directors meeting of Reserve Bank of India. Coming to the next question, that is India recorded a current account deficit of what percentage of GDP during April-December 2022-23? So this was also during April-December 2022. So this was also mentioned in the annual report of Reserve Bank of India. So you need to have the understanding of this. You need to remember this percentage. Okay. India recorded a current account deficit of 2.7% of the GDP during the April to December 2021 as compared with the deficit of 1.1% during April to December 2021. So here the right answer was B, 2.7% of the GDP. Okay. Now coming to the next question, that is the digital payment index. So the RBI has been publishing a composite Reserve Bank of India digital payment index. Now this has the base period of what? So the digital payment index shows the penetration of the digital payments, the extent of the digitization that has happened of the payments. Okay. So the digital payment index has the base year March 2018. So everyone should be aware about this, that March 2018 is the base year for the digital payment index. Digital payment index depends on 5 broad parameters. Those are mentioned here. You can see that these are the 5 broad parameters, and the highest weightage is given to the payment performance. Okay. And the recent data for the digital payment index was of September 2022, that was 377.46. This was the digital payment index that was for September 2022, that is 377.46. The base year is March 2018 for digital payment index. Now coming to the RBI conducted the Financial Literacy Week 2023. The theme of the Financial Literacy Week was Good Financial Behavior, Your Savior. The Financial Literacy Week has been conducted since when? So you have to tell that since when the Financial Literacy Week have been conducted. So here I am getting the answer A, that is absolutely correct. It was conducted since 2016. For this year, remember the theme, Good Financial Behavior, Your Savior. Okay. Now coming to the next question, the Global Hackathon Harbinger 2023 Innovation for Transformation. This was conducted. What is the theme of this hackathon or this Harbinger that was conducted in 2023? So here the answer is Inclusive Digital Services. So this is the theme of the Harbinger 2023. Here the 4 problem statements were given, and on these 4 problem statements the technological solution has to be developed. Okay, so the technological solution has to be developed on these 4 problem statements. This was the Harbinger in 2023 Innovation for Transformation Hackathon. Now coming to the next question, that is regarding the government securities lending. Till now you can sell and buy the government securities, but now you can also lend the government securities. The banks can lend the government securities. Okay, so the government securities that is issued by the central government, excluding the treasury bills, shall be eligible for lending and borrowing under the GSL transaction. So only the government securities that is issued by the central government, the long-term government securities issued by the central government are allowed for the lending and borrowing. Even the state development loans or the state government securities are also not eligible for the lending and borrowing. But the government securities issued by the central government, including the treasury bills and the state government securities, they are eligible for being kept as the collateral in the lending and borrowing process. So in the lending process, you have to keep the collateral. So similarly, the central government securities, including the treasury bills, including the state government, like also the state government securities, they can be kept as collateral. All the GSL transactions shall settle on the delivery basis. You are giving the security for the lending and you are getting the collateral. So delivery on delivery basis. All GSL transactions shall settle through the Clearing Corporation of India Limited or any other central counterparty that is approved by the Reserve Bank of India. So here the correct answer is E, that is B and D. Both statements were incorrect, this and this. Okay. So the government, this we have discussed that the GSL, that is the government securities lending, is allowed. The government securities lending has been allowed, and this lending, the government securities that is issued by the government, central government, excluding the treasury bills, they are allowed for the lending and borrowing. All the government securities, that is the central government securities, including the treasury bills, include as well as the state government securities, they are eligible to be placed as the collateral. So delivery on delivery basis, the transaction will happen, as well as the Clearing Corporation of India, all the other central counterparties that are approved by the Reserve Bank of India. Through this, the settlement has to happen. Okay. Now coming to the next question, that is the government securities are being lent for minimum 1 day and maximum up till which time period? So as per the Reserve Bank of India, the government securities lending directions 2023, the transaction shall be undertaken for a minimum period of 1 day and a maximum period of 90 days. So here the correct answer was 90. Okay. So now coming to the next question. Recently, the UPI Pay Now linkage happened. The UPI of India and the Pay Now of Singapore, they were linked. There is a daily transaction limit of dash in a day for undertaking the cross-border remittance transactions through the UPI Pay Now linkage. So the daily transaction limit is of rupees 60,000. So yes, A is the correct answer. Yes, very good. So 60,000 is the limit, and that is the sovereign, the Singapore dollars, 1000 is the limit. Okay, in the Singapore dollars, 1000 is the limit, and the DBS Bank of Singapore and Liquid Group, the non-bank financial institutions, these are allowed for the transactions. Okay. In India, Axis Bank, DBS Bank, ICICI Bank, Indian Bank, Indian Overseas Bank, State Bank of India, they are allowed to receive the money, and the sending of the money should happen through these banks only. The sending of the money or the receiving of the money is only happening the person to person. It is not for the merchants. So the UPI and the Pay Now linkage has happened for person to person transactions, not for the person to merchant. Okay, remember this clearly. Coming to the liberalized remittance scheme. So this is the UPI Pay Now linkage that has happened. So the money is being sent through under the liberalized remittance scheme. Now coming to the next question, India's first ever surety bond insurance product from Dash was launched in December 2022 by Union Minister for Road Transport and Highways. So for the first time, the surety bond was released for the infrastructure. So the surety bond is the bond that is released for the infrastructure projects. This surety bond is given to the government of India. It is given to the government of India through the contractor. So the insurance company is providing this surety bond to the contractor, okay, for the surety of the government of India, that if the contractor is falling down, the insurance company is going to handle the loss. Okay, so it was the Bajaj Alliance General Insurance that has launched the first surety bond. So here the surety bond, you can see that in the surety bond, the insurance company is providing the surety, it is providing the bond to the contractor for the obligee, that is the government. Okay, so the surety bond is provided, surety bond is bought from the insurance company by the contractor, so that if the contractor is not providing everything on time, is not providing the infrastructure on time, so the government of India, losses that the government of India face, that can be covered through this surety bond, can be covered through this insurance company. So the contractor is purchasing this surety bond from the insurance company. So it is like the guarantee that is given to the government of India, that if the contractor is failing and if the contractor is not working properly, is not following the terms and conditions, the insurance company will face all the losses, will cover all the losses for the government of India. Okay, So now coming to the next question, that is, as per the recent news, the Dash has approved the acquisition of the additional stake in the EduTap by General Atlantic. So the acquisition or the mergers, they are under the Competition Commission of India. They have to take the approval from the Competition Commission of India that maintains the competition in the country. Okay, so that there is no monopoly that is created in some of the markets. So to maintain that kind of competition in the country, in the markets, this is the Competition Commission of India from which the permission has to be taken. So the news article as such is not very important, but it is important that who approves. So it is the Competition Commission of India. Okay. Now coming to the next question, state finances a study of budgets of 2022-23. This was released with the theme. The theme of the report was what? It was capital formation in India, the role of states. So the state finances a study of budget has been released by Reserve Bank of India. The theme of the report is capital formation in India, the role of states, and this has been discussed in length. So these are the highlights, just this. If you are able to do this, that is enough. Okay. So here the state's gross fiscal deficit has declined from 4.1% to 3.4% in 2022-23. So these are the highlights that you need to understand, that you need to remember. If you do not understand, you can see my session in YouTube. Okay. So now coming to the annual report of the Ombudsman. So we will discuss some questions regarding the annual report. So this is the first question. Try to read the question and try to answer the So here the ambit of the Reserve Bank, so first of all, the Reserve Bank Integrated Ombudsman Scheme, this was introduced in November 12, 2021 by the Prime Minister of our country. So this was launched. So this is correct. The ambit of Reserve Bank Integrated Ombudsman Scheme 2021 was extended to include the non-scheduled urban cooperative banks with deposit of rupees 50 crore and above. So this is wrong. It was 50 crore and above. Okay. Under the Reserve Bank Integrated Ombudsman Scheme, the centralized receipt and processing center has been established in Chandigarh to receive the complaints through the email or physical mode from across the country and to handle the initial scrutiny and processing of the complaints. Okay, this contact center has been launched that will help the people to raise the complaint, providing them information regarding the redressal mechanism under Reserve Bank of India, and to have the awareness messages, to spread the awareness messages. Contact center has been launched and this is present in 10 regional languages apart from Hindi and English. So in Hindi and English as well as the information is spread on in 10 additional languages. So this is all the information that is provided here that you can read. These are the highlights of the annual report of Ombudsman. So CMS portal, through the CMS portal, that is complaint management portal of the Reserve Bank of India, as well as through the CP Grams, that is the portal of the Government of India. Through these, the complaints can be raised. So I have provided you the information that you can read. Okay. Coming to the next question, that is regarding the percentages. So the volume of complaints received under the Ombudsman Scheme Consumer Education and Protection Cells during the year 2021-2022 increased by 9.39% over the previous year. So that is correct. The complaints that have been received has been increased. The complaints relating to the digital mode of payment and transactions were the highest in number. So that is correct. The complaints that were received regarding the digital modes that were highest in number, constituting 42.12% of the total complaints. The rate of disposal of complaints by the Reserve Bank Integrated Ombudsman has improved to 97.97% in 2021-22. So that is also correct. 63.63% of the maintainable complaints were resolved through mutual settlement. So that is also correct. So these are some of the percentages that you need to remember. Here the correct answer was B, because this percentage was wrong and the incorrect statement is B, and that's why this is the correct answer. So these are some of the percentages that you need to remember. Okay. Now coming to the next question, that is regarding which of the following releases the report. So it is the Consumer Education and Protection Department that actually releases the report of the annual report on Ombudsman Scheme. Okay. Now coming to the next question. So this is the way forward, that what the ombudsman, like Reserve Bank integrated ombudsman scheme, how it should move forward. So these are some of the way forward, okay, that is given in the report. So now coming to the next question. So recently the urban cooperative banks have been divided into 4 tiers. You have to tell that, okay, the tier 1, the 4 tiers under the revised regulatory framework, it has been decided to specify the limits on housing loans sanctioned by the urban cooperative banks to an individual borrower. So the housing loan that can be provided to the individual borrower by the tier 1, the limit is 60 lakh, and for the tier 2 to tier 4, the limit is 140 lakh for the individual borrowers that the urban cooperative banks can give. Okay, so for the tier 1 urban cooperative banks, the limit is 60 lakh, and for tier 2 to tier 4 urban cooperative banks, the limit is rupees 140 lakh. This is the limit that can be provided to the individual borrowers. Coming to the next question, that is regarding the sovereign green bonds. As announced in the Union Budget 2022-23, Government of India, as part of its overall market borrowings, will be issuing the sovereign green bonds for mobilizing the resources for the green infrastructure. So these bonds have been released. These are the sovereign green bonds that they will be issued through the uniform price auction, that is a single price. That is correct. 10% of the notified amount of sale will be reserved for the retail investors. This is not correct. Tell me what percentage of the notified amount will be reserved for the retail investors. So the sovereign green bonds, they are the bonds of the government, they are the government securities, so they will be eligible for keeping in the repo transaction. So in the repo transaction, the RBI is giving loan to the banks, and the banks is giving collateral to the Reserve Bank of India. The collateral is government securities. So the sovereign green bonds are also government securities, so they can also be kept in the as the collateral for the repo transaction. Sovereign green bonds will be reckoned as eligible investments for SLR. So under the statutory liquidity ratio, the cash, the government securities, the gold can be kept. So yes, sovereign green bonds are the government securities, so they can be kept under the SLR. They can also be traded in the secondary market. There is 5%. So 5% of the notified amount of the sale will be reserved for the retail investors. So this was the incorrect statement. It was not 10, it was 5. So 5% of the notified amount of the sale will be reserved for the retail investors. Okay. So this is regarding the sovereign green bonds that you can read. These are the bonds that is issued by the Government of India for the infrastructure, for the green infrastructure. Okay. So the money that is being collected from the sovereign green bonds will go for the green infrastructure, for the green activities and green projects. Now you have to tell that for Utkarsh 2.0, this is the document. Utkarsh 2.0 is the document that shows the path of the to the RBI, that how the RBI should move forward for the period 2023 to 25. So the Utkarsh 2.0 is launched for the period 2023-25. This is a guiding light. This is a guiding book that shows that sets out the course for the Reserve Bank of India, that how the Reserve Bank of India should move forward. Okay. Next, so it is the vision in Utkarsh 2.0. There are the 6 visions that have been listed, and the Utkarsh 2022 was the first document of the Reserve Bank of India. Was the first Utkarsh. Okay. So Utkarsh 2022, this was launched for the period of 2019-2022. Utkarsh 2.0 has been launched for 2023-25. So there are the 6 visions. That is, first of all, focus on the excellence of on the functions of Reserve Bank of India. Strengthen the trust of the citizens on the Reserve Bank of India, the trust of the banks on the Reserve Bank of India. Enhance the relevance and significance in the national and global roles. This is the vision of that is laid down in the Utkarsh 2.0. Transparent, accountable and ethics driven internal governance of Reserve Bank of India. Best in class, environment friendly, digital, physical infrastructure and innovative, dynamic, skilled human resource. These are the 6 visions of Reserve Bank of India that is laid down in document. The Reserve Bank of India has given the list for domestic systemically important banks. So there are the 3 banks, that is State Bank of India, SDFC Bank and the ICICI Bank. So these are the domestic systemically important banks. Now they are very important. They are too big to fail. If they fail down, the monetary system of our country will be in trouble. So they have to maintain some additional common equity tier 1. So all the other banks are maintaining 5.5% of the common equity tier 1 capital with themselves. So which of the following banks have to maintain the additional common equity tier of 0.60 percentage? So that bank has to maintain 5.5% of the common equity tier 1, as well as they have to maintain 0.60% of the additional common equity tier 1, that is the capital that the banks can use in the distress kind of situation. So here the answer is State Bank of India. The State Bank of India is the one that has to maintain 0.60% of the additional common equity tier 1 capital, that is the capital that can be used for the distress kind of situation. Okay. So they are the too big to fail banks. They are very big in size. They are not substitutable, very easy. They do not have the substitutability. They are interconnected, and as well as they are quite complex in nature. Okay. So they are too big to fail banks. Next is the RBI released the payment vision 2025 and 2022. The activities to be taken up during the period up to 2025 as part of vision 2025. So the payment vision 2025 was launched by the Reserve Bank of India. This was to enhance the payment infrastructure in the economy. This was to enhance the payments, the digital payments in the economy. There were the 4 E's that were the theme of, that was the theme of this payment vision. That was e-payments for everyone, everywhere, every time. Okay. And there were the 6 attributes and the 5 goal posts. So you have to tell that which of the one is among the 5 anchor goal posts. So I'm getting the answer D, and that is absolutely correct. So there were the 4 E's. So the payment vision 2025 has the core theme, e-payments for everyone, everywhere and every time. The vision aims at 6 attributes, that is safe, secure, fast, convenient, accessible and affordable. So these are the 6 attributes of the payments of the digital payment that should be present. 5 anchor goal posts are integrity, inclusion, innovation, institutionalization and internationalization. Okay, so these are the 5 anchor goal posts. Next question is regarding the LIBOR. So try to answer this question. So there were many problems that were coming with LIBOR. Okay, the LIBOR was being used by the top global banks for their own purpose, for their own profits. So it was said that the LIBOR have to banish the benchmark. It is the benchmark rate. It is the reference rate that is utilized for setting the other interest rates by all the other banks, all the other NBFCs. So we have to stop using LIBOR and we have to move to the alternative reference rate by July 1st, 2023. We have to start using the alternate reference rate. So here the correct answer is E, that is by July 1, 2023, we have to stop using the LIBOR and we have to start using the other rates. So the LIBOR definition has been given. So you can read it. So LIBOR is provided in 5 currencies. Every day LIBOR was provided in 5 currencies and for 7 maturities. So instead of LIBOR, now there is going to be the other rate, alternate reference rate that is going to be used. Okay. So the LIBOR, so there was MIFOR, that is the Mumbai Interbank Finance Forward Outright Rate. So MIFOR, yes, Mumbai Interbank Forward Outright Rate, that is correct. So it was MIFOR. So MIFOR was dependent on LIBOR plus forward premium. So the MIFOR was dependent on LIBOR plus some forward premium. Now if the LIBOR is going to stop, that means the MIFOR is also going to stop. But which of the following entities used to publish MIFOR, that you have to tell. So everyone is giving A as the right answer, that is correct. It was Financial Benchmark India Private Limited that used to publish MIFOR. Now LIBOR is going to stop, that means MIFOR is also going to stop. So MIFOR, you can read about this. It is dependent on LIBOR plus some forward premium. You have to answer, the alternate reference rate SOFR will be used against LIBOR. The new transactions will be predominantly undertaken using SOFR. So what does S stand for in the SOFR, that you have to tell. So against the LIBOR, we are going to start using SOFR, and against the MIFOR, we are going to use the modified MIFOR. So which of the so you have to tell that S stands for what? Yes, everyone is giving the right answer, that is secured. So that is correct. So SOFR is the secured overnight financing rate. Now this is the rate that is dependent on the repo transactions that are happening in the overnight Federal Reserve. Okay. So repo transactions that are happening in US, that is the Federal Reserve, that is the monetary authority of US, is providing the loans at the interest. So on that interest, the SOFR is dependent. You can read it here, and I have also taken a session on this. So if you have any confusion about the complete LIBOR news article, then you can go and see that session. So new transactions are now predominantly undertaken using SOFR and the modified MIFOR. Modified MIFOR is dependent on SOFR. So now coming to the next question. First of all, these are risk-free rates and they are based on active market transactions that are happening. The SOFR is dependent on the repo transactions that are happening in US market, that is done by the Federal Reserve and the banks. They are engaged in the repo market in US. Okay. So now coming to the next question, the standing deposit facility which was introduced in dash currently stands at what? So standing deposit facility was introduced in what? In which month, in which year? So yes, I am getting the answer C. Yes, Tapan, Saurish, Muskan, yes, absolutely correct. So the standing deposit facility, this was introduced. Now, if you have seen the top 50 important terms session, you know that these kind of questions can come, okay? That what is the current MSF, what is the current SDF, what is the current repo rate. So the current SDF is 6.25% and the SDF was introduced in April 2022. Okay, so the SDF was introduced in April 2022. So be very careful with this. Now coming to the next question, the RBI has a central repository of information on large credits database system, which includes the exposure, that is the loan that is given by the bank of what amount and above. So it is RBI has a CRILC database system where the banks report their exposure of 5 crore and above, which is used for the monitoring purpose by the RBI. Okay, so here the right answer is D and that is absolutely correct. Now coming to the next question, the Ministry of Finance, the Government of India brought the cryptocurrency under the ambit of Prevention of Money Laundering Act. So the Finance Ministry has said that all the dash has been brought within the ambit of Prevention of Money Laundering Act 2022 currently. So which of the following is the correct answer for this one? So I am getting the answer A. Sorish has given the answer A. Rohit has given the answer A. That is correct. The virtual digital assets have been brought under the, this is the Prevention of Money Laundering Act 2002. In this, there is the Directorate of Enforcement that have the power to seize the property if the people are coming under the Money Laundering Act. Okay. So according to the government notification, the exchange between the virtual digital assets and the usage of the virtual digital assets, they will be brought under the Prevention of Money Laundering Act. Okay. So there is the ED, Enforcement Directorate, that is responsible for investigating the offence. The information is collected by the Financial Intelligence Unit India, that is independent body that is directly reporting to the Economic Intelligence Council headed by the Finance Minister. Coming to the next question, that is cash-free payments and which bank So cash-free payments and which bank has partnered to offer the global connections and international collection service for exporters who are account holders. Which of the following is the X bank? So it is, I am getting the answer D, and that is correct. The Yes Bank has collaborated, the Yes Bank has partnered with Cash Free to offer international collection services, new service called Global Collection, which allows Indian exporters to collect payments in 30 foreign currencies equivalent to $10,000, up to $10,000. So PIDF scheme, that is a very important scheme. In February 2023, the status update has come of the PIDF scheme. Now you have to tell that which of the following statement is correct regarding the PIDF scheme. So first of all, the scheme shall include eligible street vendors under the PM Swanidhi scheme in tier 1 and tier 2 centers. Okay, because the tier 3 to tier 6 centers, they directly come under the scheme. So the street vendors from the tier 1 and the tier 2 have to be included in the scheme separately. So here tier 1 and tier 2 centers. Primary focus is to create payment acceptance infrastructure in tier 3 to tier 6 centers. Okay, so primary focus is to create the payment acceptance infrastructure, that is payment infrastructure has to be provided to the merchants in the tier 3 to tier 6 centers, that are the rural areas, that are the far off areas. The street vendors in the tier 1 and the tier 2 centers also has to be provided with the payment infrastructure, with the POS machines, with the QR codes, as well as the northeastern states of the country and the Union Territory of Jammu and Kashmir and Ladakh shall be given special focus. So here the second statement is correct and the first and the third statements were wrong, and that's why the answer is B, that is only 2. Next question is, contribution to the PIDF is made by the Reserve Bank of India authorized card networks, the card issuing banks. The corpus stands at dash as on December 31st, 2022. So what is the corpus currently? So the recent corpus is 788.20 crore. Okay. So the recent data, the recent corpus is 788.20 crore. So this is the complete information regarding the PIDF scheme. So I have taken a separate session on the PIDF scheme. You need to have the complete information regarding the LRS, Liberalized Remittance Scheme, the Sovereign Gold Bond Scheme, the PIDF scheme. These are the schemes that have already been discussed yesterday by Gurukira sir. So I'm not focusing on this much, but you need to have complete clarity because they are important from the finance current affairs point of view also. Okay, have the basic understanding that the validity is for 3 years from 2021, which can be extendable by further 2 years. The PIDF target is, now this has come in the previous year also, the question, increasing payment acceptance infrastructure by adding 30 lakh touch points. Okay, advisory council under the chairmanship of the deputy governor has been constituted for managing the PIDF. Okay, now the next question is, according to the provisional estimates that have been released by the National Statistical Office, recently in May only this provisional estimates have been released. So as per this estimates, the real GDP growth for the 2022-23 was placed at dash percentage, which was higher than the second advanced estimates, which said that the real GDP growth is 7%. So here I am getting the C answer, that is absolutely correct. As per the provisional estimates that were released by the NSO, the India's real GDP growth for 2022-23 was estimated at 7.2%. Coming to the next question. So a notification has been released recently for the that is the framework for the compromise settlement and the technical write-off. So the NPAs, the non-performing assets or the stressed assets with the banks. So there are the many stressed assets with the banks, that is the loans that are not coming back, the interest is also not paid. So for that, the compromise settlement can happen or the technical write-off can happen. So for this, the guideline has been provided by the Reserve Bank of India. In this, the cooling period in respect to the exposure, the loans other than the farm credit exposure shall be subject to a floor of, I'm getting mixed answers. So here the right answer is 12 months. Okay. So here this framework has been released for all the regulated entities that are under the ambit of the regulation under Reserve Bank of India. That is all the commercial banks, all the urban cooperative banks, all India financial institutions, all the NBFCs, they are all included under this framework. Okay, so the cooling period for the exposures other than the farm credit exposure shall be subject to a floor of 12 months. Okay, for the farm credit, if in the farm credit there is the compromise settlement that is happening, so there is the cooling period that the board has to decide. So in respect to the borrowers that are doing the compromise settlement, that are not giving the complete amount to the bank, okay, so for that the compromise settlement is happening. So for them the cooling period is decided that when a fresh loan can be given to such kind of borrowers that have done the compromise settlement. So cooling period for the exposure other than the farm credit is 12 months. That has been said by the Reserve Bank of India. For the farm credit, the board has to decide that what is the cooling period. Compromise settlement, if the time for the payment in the compromise settlement is exceeding 3 months, it will be called restructuring. So what is the compromise settlement? First of all, in the compromise settlement, it is a one-time settlement. You have to give 2 lakh to the bank. You are not able to give that. So the bank will say that, okay, just give us 1 lakh and we are writing off, we are waiving your extra 1 lakh. Or just give us 75,000, we are waiving off 1,25,000. So this is the compromise settlement when the bank feels that no money is going to come out of this borrower, or this borrower is in the financial trouble kind of situation. So the bank can do the compromise settlement. The bank can give you the waive. So it is a full and final settlement that happens, that just give us the 75,000, just give us the 1 lakh and we are waiving off your other amount. Okay, so this is the one time settlement that happens. And the time period, if the time period is less than 3 months, so it is compromise settlement. Any arrangement involving part settlement. So what is happening, that the bank is saying that, okay, out of your 2 lakh, we are waiving off 50,000. You have to pay us 1,50,000 in this period, in the 6 months, in the 1 year, or we are reducing your interest rate, or we are doing any kind of, like we are increasing the timeline. So this is the restructuring, that is the part settlement is happening. Here, see, in the compromise settlement, the relationship between the bank and the borrower has broken. The one-time settlement has happened, now the bank doesn't know the borrower. In the restructuring, what happens, that there is the, which a lender, for any economic or legal reason, financial difficulty is faced by the borrower, and for this reason, the lender is giving the grant to the borrower or concessions to the borrower. Okay, so it is the part settlement that happens in the restructuring. Technical write-off, that the bank is not showing it in the books, that the bank is not showing the NPA in the books, but still the NPA is there, still the bank has to get the money. So this refers to the cases where the non-performing assets remain outstanding at the borrower's loan amount level but are written off, they are fully or partially not shown by the regulated entity only for the accounting purpose, without involving any waiver of claims against the borrower and without prejudice of the recovery of the same. Okay, so here compromise settlement, one time settlement has happened, there is no relation between the bank and the borrower now when the settlement is complete. Restructuring means that the part settlement is happening, you are giving some kind of concessions to the borrower and you are saying that return the left out amount. If the compromised settlement is happening and the timeline is given more than 3 months, it will be called restructuring. So these are the important terms that you needed to understand from this notification, that I hope you have understood. Okay, so this was the recent notification that was released by the Reserve Bank of India. The next question is regarding the Monetary Policy Committee. So we are going to discuss about the compromise settlement, and we are going to have a separate session on the compromise settlement and the default loss guarantee, as well as the call notice, the term notice and such. Okay, so if you are not able to understand now, we will have a session for that. But this was all that was necessary. So if you have understood, so this is what is required from the exam point of view. Okay, so which of the following is correct? For the Monetary Policy Committee, I am getting the answer A. I am getting the answer C now. So yes, the C is correct. The Monetary Policy Committee determines the policy rates only for maintaining price stability. No, price stability in a view of the growth also. Okay, so the RBI decides the policy rates for maintaining the price stability in view of growth also. Okay. There are 6 members in the Monetary Policy Committee, three of which are appointed by the government. So this is also wrong. This is also wrong. The meeting of the MPCs shall be held at least 4 times a year, and it shall publish its decision after each meeting. So that is true. This is the correct statement. The MPC can meet 6 times, 10 times. It is as per the Monetary Policy Committee decision. But they have to meet at least 4 times. The central government, in consultation with the RBI, decides the inflation target for the consumer price index once in every 5 years. So this is also wrong. So this is regarding the Monetary Policy Committee. You need to have the basic idea for the Monetary Policy Committee. Next question is regarding the IREDA that has got the status improvement. So from the investment and credit company, the change of the status has happened for the IREDA, that is, it has got the status of infrastructure finance company. So before it had the status of investment and credit company, now the IREDA has the status of infrastructure finance company because it was working quite a lot for the renewable infrastructure development. For the past 36 years, it was working for the infrastructure financing and development of the infrastructure for the in the country. Okay, for the renewable infrastructure it was working. Now coming to the last question, that is regarding the e-rupee. So in the statement on developmental and regulatory policies that was released in June 2023. So in this, the e-rupee, the proposal has been made that we need to enhance the reach, enhance the scope of the e-rupee. You have to tell that which of the following statement is correct in regards to the e-rupee. So the e-rupee is a digital voucher that is launched in August 2021. So this is correct. It rides on the UPI system of the NPCI, that is correct. At present, purpose specific vouchers are issued by the banks on behalf of the central and the state government to a limited extent on behalf of corporate. So that is also correct. At present, non-bank prepaid payment instrument issuers can issue e-rupee vouchers. This is wrong. So it has been said by the RBI. It has been proposed by the RBI that we need to permit the non-bank prepaid payment instrument issuers to issue e-rupee vouchers, as well as for the individuals, on behalf of individuals also, the e-rupee voucher should be issued. So these are the proposals of the RBI. Currently it is not present. So the e-voucher, I hope you have got the brief understanding. It is the banks that release, it is the banks that issue that provide the purpose specific vouchers on behalf of central government, on behalf of state government, like sometimes on behalf of the corporate also, but on behalf of individuals it is not released. So it has been proposed that on behalf of individuals also, the e-rupee voucher should be issued through the non-bank prepaid payment instruments. So these are the on the statement on developmental and regulatory policies, there was also the mention of the Bharat Bill Payment System, that we should onboard more operating units in the Bharat Bill Payment System that can smoothly operate the Bharat Bill Payment System. As well as, so I am going to tell you regarding one more notification that is released in this month only, then we can say bye-bye, okay. So internationalization issuance of the acceptance of the RuPay credit card. So expansion of the payment option. Now the RuPay Forex cards will also be provided. RuPay prepaid Forex cards will also be provided. That is to be used in the ATMs, POS machines, for the merchants, for paying the merchants overseas. So the RuPay, it has been said by the RBI that we will be also issuing the guidelines for the RuPay Forex cards, so that the foreign exchange cards, that is the prepaid cards, can be taken in the RuPay form, in the RuPay card form, and this will make the RuPay cards international. Okay. So there is another notification that is regarding the call notice, term notice, and this is regarding the scheduled commercial banks, that they can set their own limits, that for the call notice and term notice, like in this area, how much money they can take. Okay, so they can set their own limits. So you can read the notification through here. So now it is be 100% current affairs ready. So the EduTap has brought for you this ultimate test series, that is you have to only invest 24 hours, and there are many 5,000, more than 5,000 questions that are provided in this, and you can, there is the 75% off that is going on. You have to use the code RBI, you have to use the code RBI 75. Okay, so you have to use the code RBI 75 and you can have this ultimate test series that is going to help your preparation in the general awareness. So thank you very much everyone, and do tell me that out of 100 how many marks did you get. Okay, how out of 100 how many marks did you get? So this was my last session. That's why I tried to bring all the notifications that were even released in June. Okay, so thank you everyone, and I'm really sorry if I was going a little slow, but I hope you have enjoyed the session. You have got many new things, you have understood many new things. It's okay, it's okay, you can download the PDF. We will provide the PDF by the end of the session. Okay, so do tell me that do you need a separate session for the call notice, term notice, and the for the last notification, as well as do you need the separate session for the compromise settlement, as well as do you need the separate session for the DLG? So if you need a separate session, then only I will bring a separate session. Okay, so do tell me that in the comment section, and do tell me that how you like the session, and do tell me that in the comment section. Okay, thank you very much everyone. Akhil, I will want you to write that in the comment section. Okay, now my voice is going. So thank you very much. Do write all your appreciation. If you have any suggestion, do write that in the comment section. If you have any query, you can write us here at the hello@edutap.co.in, as well as you can call us through this number. Okay, so thank you very much everyone. See, if you follow this session only, if you do the revision sessions only, that is enough for the examination from the RBI notifications point of view. Now you do not have to go in depth, just focus on the points that is required from the exam point of view. That is what I would like to say, and I would like to see all of your comments in the comment section also. So thank you Nitesh, thank you Sarthak, thank you Prachi, thank you Alisha, thank you Sorish, thank you everyone. So thank you Akhil, and I would like to see all of these comments in the comment section also. Thank you everyone. Okay, thank you. Now I think we should close the session. If there is any query, you can write in the comment section. Do tell me that do you need separate session for these notifications. Okay, and if you have any query, you can write in the comment section. Okay, and do comment in the comment section that did you like the session, and all the comments of the thank you and everything that I am seeing here, I hope I see that in the comment section also. So thank you everyone. Bye bye.